This is David Frost, mystrategicforecast.com. You're here for another episode of Common Sense Market Analysis on Tuesday, October 21, 2014. Daily chart of the SPY. Wow, what a rally today. If it wasn't for IBM and Coca-Cola and McDonald's and a couple other stocks that held the Dow down, the Dow would have been up 350 points today. As it stands, the Nasdaq was up the S&P was up almost 2%, 37 points, and the Nasdaq Composite 2.5%, 100 points, 103 points. So basically what you have here, and I want to show you this. Let's get out the Fibonacci tool right away, okay? And let's put, okay. So you came today let's get rid of this, right up into the 618 retracement tonight, or today, and that should be a stopping point for the market. And just because the market's out to trick everybody, don't discount some more upside tomorrow, and then potentially a little bit of reversal or whatever, but for the most part, you might not have to look for a reversal in the market so much as at least just a pausing up here, because there may be some more upside to be had. With the strength that we've had over the last 3 or 4 days, I wouldn't put it past the market to get almost up into this, if not to this 50-period moving average, and maybe even pierce through it at about 197. That would be basically a whopper of a rally since the bottom, and that would be also a good stopping point. But this should provide some pause to the market, but it remains to be seen. Now, what happens after this? Here's the deal. The higher we go off of this bottom here, the more I'm inclined to believe that while we'll have another down move, and remember I talk about this type of correction that's like an ABC correction. So let's say this is A, and let's say B comes down here, okay, over the next 2 or 3 days. I'm making it up as we go along. And then C maybe comes back up to the 197 area, and then that completes the corrective rally, which is the corrective rally off of the larger trend change, if that's the case, and then we would proceed down. But now, because we've had such a strong rally off this bottom, it remains to be seen. I'm not saying yes and I'm not saying no, but it remains to be seen if we make a higher low and then rally into the end of the year, or a lower low and rally into the end of the year. Either way, I think we'll get a rally into the end of the year. Now it just remains to be seen from where. Is it from somewhere down here, or is it from somewhere down here? We don't know yet, and we won't know it till we get there, but we'll do the best we can to map out the markets and provide that roadmap we're all looking for. Now, since we like to look at other indexes too, let's look at the IWM. We've been looking at a lot of this index lately, and wow, this was a really strong day, and you basically took out this pivot here, which is important, and this pivot here, and this pivot here, which is important on a closing basis. So now you're taking run at this at about 111, and then potentially up in this area at 113.5. Now, that's very possible. The IWM is very strong, and the Nasdaq is very strong. Obviously, the S&P was very strong, but remember last night I said when the IWM is strong and the Nasdaq is strong, you got tech and you got small companies or small cap index. That definitely spells money going into risk assets. So you have to pay attention and think that while the market's going up, the market's going up. A lot of times, what a lot of people that have a negative outlook on the market will do, they will try and impose their will on the market. They will come up with reasons why the market shouldn't go any higher, short the market, and then be the guy on the other side of the craps table while everybody is rolling the dice and winning thousands of dollars. They're standing in the corner real quiet, betting against the trend. That's what you don't want to do. You don't want to bet against the trend here, even if it's for another day or two. You can put yourself behind the eight ball if you try and short into these powerful upward rallies that are, even if it's corrective or not corrective, it doesn't matter. It's powerful, and you have to go with the trend when it occurs. We will find a signal that says the market will change trend if it does when it gets here. And that's why we say we let the market tell us what to do. We don't impose our will on the market. So don't try and short this market until the market gives you a signal it's finished going up, because there could be another 2 or 3% on the upside, and you don't want to look stupid. Okay, we've all been there as traders and investors, and I speak from experience. It's a very humbling business. Okay, you have to know when you're wrong, and you have to recognize where everybody else is cheering on the market, it's going higher. Jump on the bandwagon. Don't try and get in front of it. It's not going to work until it's ready to change trend. All right, let's go over to the oil market, and we'll take a look at the USO. Oil in the middle of the day today, let's just take a look here. In the middle of the day, oil spiked up, and then it was chopping around, and then it went back higher. But for some reason or other, and I happened to be at the time watching the price of crude around late morning when it started to sell off, and I thought the market was going to follow, because the market and crude have been linked together for the last several weeks. And it seemed to me that it was a tell that the market was going to stall out, and it didn't. The market continued higher, and then crude reversed, and then it went back down and reversed again. But it was just interesting. I don't know what to make of it. I'm just bringing it out for a point of interest. But nevertheless, it's really not going anywhere. So let's go back to the daily chart. And, you can see you're just kind of going back and forth, back and forth. And as long as you stay inside of the 3192 level, okay, until you close above 3192, that's what's going to happen. You're going to chop around, chop around, chop around. Once you close above, let's just call it 32, then you can probably take a little bit of a run, but I don't know how much upside there'll be for the time being. 33 and a half is probably about it for the time being if we did that. But we'll see. Remains to be seen. It's not showing us anything, therefore there is no trade. Gold. This is the GLD. GLD was up 22 cents today. It's hovering around the 50-period moving average. Not much going on. There may be a little more upside in gold, but until it shows us a viable pattern that it's going to go a lot higher, we'll just say that it's in a holding pattern. Maybe there's another, $15 or $20 in the price of gold. Gold's trading at $12.49 as we speak right now. And, I don't think the top side for the time being is really above 1270, but we'll see what happens. And if it shows us something different, I'll certainly point it out if I see it. What else do we have? Anything else we want to talk about? We had some earnings after the bell. You had Yahoo that was apparently up, or was up last I looked. And you had some other stuff going on. You had VMware, which is a pretty big tech stock. I think that was down after hours. Google struggled today, which was interesting, I thought. Let's just take a look at Google L, which really on a day like today should have been up. And I'm looking at the quote here. Let's see. Google was it was only up $5 or 1%, $5.70, 1%. For a market leader, what's supposed to be a market leader, really should have been up $10, $12, $15 today, easy. And that didn't happen. So I'm watching that. That doesn't feel good. It just should have been higher. That's all I have to say on that one. Although Facebook was higher, and Twitter struggled today for some reason or other. And what else do we have in the tech world? Oh, Apple, certainly Apple. Apple had a good day, 2.5% on a 2% market day. 2.5% NASDAQ day. I don't know. It probably should have been higher, but it was pretty decent showing. Don't forget, Apple's at highs, pretty close to highs, And if I had to say, where does Apple go if it breaks out? We'll look at a weekly chart. And if Apple breaks out, I just don't think it can break out. That's the problem. I mean, if it breaks out, I guess it can go to 105, 106, but I don't see anything more than that right now. However, if we did this for a while longer, if we did this for another couple of weeks, then I would change my tune. But right now, I don't see anything above really 105 to 106 tops in Apple right now. So I think it's in a holding pattern. But down here in the mid-90s, if we get there again on another sell-off, I think Apple's probably a buy. You have somewhat of a put underneath Apple. They're buying back a lot of stock. Carl Icahn is always jawboning Apple. There's a lot of other big names in Apple, and they're such a cash-generating machine that if they continue to buy their own stock, you're fighting Apple, and they can certainly buy more than, well, maybe not you, but they can certainly buy more than I can, or I can sell anyway. So I wouldn't be shorting Apple at any point in time, only because of that put issue. There's just too many people interested in Apple going higher. They think of it as a safe haven. Not that it can't go down. Eventually it will. But right now, Apple has somewhat of a put underneath it. So if you're thinking of shorting Apple, I would think about shorting something different. Short weak stocks. Don't short stocks that are above all those moving averages. It's a fool's game. And that's the weekly anyway, but the daily looks the same. Now it's above all the moving averages. So don't short stocks that are above the moving averages, especially on a weekly basis. They're too strong. All right, I think that's a wrap for tonight. I'm David Frost, mystrategicforecast.com. Thanks for tuning in for another episode of Common Sense Market Analysis.